Let's clear this up right now. When most retail investors ask, how much XRP is enough? They're thinking in the completely wrong framework. They're thinking small. They're thinking like someone chasing the next meme coin pump. But XRP was never about short-term gains. It was never about hype. It's infrastructure. And you don't invest in infrastructure with the same mindset you use to buy a Dogecoin clone. The truth is, the real question isn't how much XRP do you need to get rich. It's how much XRP do you need to be positioned for the next phase of global finance. Let that sink in. This isn't about holding enough to hit a $10,000 goal. It's about holding enough to be exposed to the new rails of value, because that's what XRP is quietly becoming. Most people miss this because XRP doesn't move like the hype coins. It moves when infrastructure shifts. It moves when a corridor opens. It moves when a central bank pilot goes live. And by the time headlines catch up, the smart money's already positioned. And that's the biggest misunderstanding in this entire space. There's no magic number, but there is a target range where XRP transforms from a speculative hold into a long-term strategic asset. We'll break those tiers down later, but first, you need to understand the historical patterns that reveal what enough really looked like before the waves hit. If you're tired of surface-level hype and want the real truth behind XRP's trajectory and how to actually position yourself for generational shifts, hit that subscribe button right now. This is the Be Crypto Smart channel, and you're about to hear what no one else is saying. Let's rewind to 2017. Before XRP was a household name, before Ripple was in the headlines, back when the crypto world was still obsessed with mining rigs, white papers, and ICO mania, XRP was sitting at fractions of a penny, literally 0.006 cents in early 2017. At that price, $100 could have gotten you over 16,000 XRP. But how many people actually did it? Almost no one. Not because they couldn't, but because they didn't understand what they were looking at. While everyone else was chasing Ethereum's ICO hype or Bitcoin's next leg up, Ripple was laying the groundwork for a real-time liquidity network that banks could actually use. Quietly, behind the scenes, partnering with institutions running pilot programs, building what would become the corridors we now call ODL, on-demand liquidity. But the retail crowd? They missed it because Ripple didn't market to them. They weren't out here hyping price predictions. They were meeting with central banks and licensing regulatory frameworks. And that's boring until it's not. Then came December 2017. The bull market went vertical. XRP exploded to $3.84. And just like that, early holders who had stacked 10,000 XRP were sitting on nearly $40,000. Some with 50,000 XRP were flirting with six-figure positions, off a couple $100 worth of conviction just months prior. But most of them sold. Why? Because they didn't understand what they were holding. They thought XRP had done its job. They thought the peak was in. They didn't realize they were holding infrastructure for a future financial system, not just another token. Fast forward to 2020. The SEC hits Ripple with a lawsuit. The market panics. XRP crashes from 70 cents down to 17 cents. Retail flees. Exchanges delist. Twitter goes full XRP is dead. And yet, if you zoom into the on-chain data during that exact time frame, something fascinating happens. Wallets holding between 10,000 and 100,000 XRP, they went up steadily, while shallow wallets under 1,000 XRP were bleeding out. The middle tier and upper mid-tier wallets were accumulating. Quietly, deliberately, while the noise screamed XRP is done, smart money saw opportunity. Because here's the pattern that repeats in XRP's entire history. The dips come from fear. The surges come from infrastructure. Every single XRP pump has followed real-world utility milestones. Not tweets, not hype, not influencer endorsements, but concrete deployments. ODL volume spikes, new corridors launching, regulatory clarity in key regions, enterprise integrations like Santander or SBI or Trenglo going live. The 2018 rally, preceded by RippleNet expansion across over 100 financial institutions. The 2021 rally came on the back of SBI Remit pushing XRP-powered remittances into Southeast Asia. And the 2024 momentum? fueled by stablecoin integration announcements, the partial SEC victory, and institutional corridor expansion. You have to see it clearly. XRP doesn't front-run hype, it front-runs deployment, which is why timing accumulation based on headlines or Reddit posts is a losing strategy. Let's go deeper into the 2023 to 2024 accumulation window. During one of the most uncertain regulatory periods in crypto history, with Ripple still in partial litigation limbo and the broader market rotating toward AI and meme coins, XRP wallet data showed a quiet storm building. Addresses holding 10,000 to 50,000 XRP, consistent monthly increases, 50,000 to 100,000 XRP, gradual but deliberate accumulation, over 100,000 XRP. Institutional grade wallets barely moved because they were already positioned. And here's the part that should shake you. While XRP trended sideways in price, the liquidity flowing through ODL corridors hit all-time highs. Ripple expanded to 70-plus payout markets. Their enterprise customers were no longer testing, they were transacting. That tells you everything you need to know. Price action isn't the signal, volume is. Utility is. Infrastructure is. Ask yourself, why would someone quietly accumulate 50,000 XRP during a lawsuit? Why would institutional wallets sit still while retail ran for the exits? Because they weren't here for a quick 5x. They were here for global settlement dominance. And this is the part 99% of people miss. They think accumulation is about catching the next wave. It's not. It's about owning a position before the system transforms around it. Before ODL volume is measured in trillions, not millions. Before central banks openly name XRP among their preferred liquidity bridges. Before custodians package XRP into tokenized FX funds for pension-grade clients. So how much XRP is enough? 1,000 XRP won't change your financial future. It's exposure. It's a foot in the door. But 10,000? That's an entry-level stake in what could become a foundational asset of the next global payment infrastructure. 25,000 XRP? That's early internet territory. That's holding bandwidth before broadband. 50,000 plus? You're not speculating anymore. You're aligning yourself with institutional patterns that the rest of the market won't notice until they're priced out. Because the real game isn't about XRP hitting $5 or $10. It's about XRP becoming indispensable. If that happens, your stack doesn't just appreciate, it amplifies. So learn from history. The people who made life-changing returns in 2017 were the ones who bought when nobody cared. The people who are quietly preparing now are following the same pattern. And that's why accumulation isn't a question of if anymore. It's a question of how much and how soon before the next real-world shift turns today's window into tomorrow's regret. Because the biggest moves in XRP, they don't come from hype. They come from history repeating itself. And right now, that history is rhyming again. You want to know the real reason XRP hasn't gone parabolic yet? It's not because it failed. It's not because people aren't using it. It's not because Ripple lost steam. It's because the floodgates haven't fully opened yet, despite Ripple beating the SEC in court. Despite XRP being declared not a security for secondary sales. Despite the liquidity corridors expanding year after year, the big capital is still waiting, but only because it had to, because institutions don't operate on hype. They don't buy on YouTube narratives. They move when the rails are built, when compliance is locked, and when the liquidity is institutional grade. And all those pieces are now coming together, quietly, systematically, relentlessly. Let's break this down. Ripple has spent the last several years building the plumbing of global liquidity. This isn't speculation. This isn't promises. It's already here. ODL, on-demand liquidity, is operational in dozens of markets. It doesn't rely on pre-funded accounts anymore. It uses XRP to move value across borders in seconds. Liquidity Hub lets enterprises tap into pooled crypto liquidity, including XRP, to facilitate payments, settlements, and FX conversions. CBDC infrastructure is being piloted with Palau, Montenegro, and conversations are well underway with central banks across Asia, Africa, and Latin America. But none of this was for show. It was to create an institutional-ready environment. a frictionless ecosystem where real money can flow through tokenized rails at scale. And now it's finally ready. That's where the institutional moment comes in. Look at the names already involved: Standard Chartered, SBI Holdings, Santander, Tranglo, Bank of America, quietly confirmed through Ripple Swell 2023 statements. These aren't DeFi protocols or random fintechs. These are the financial giants who settle billions daily. And here's the kicker: they're not just exploring RippleNet, they're embedded in it. SBI is running XRP-powered remittances across Asia. Standard Chartered is building payment corridors. Santander has used Ripple tech for years. And Ripple's roadmap has gone from partnering with banks to powering the system behind the scenes. And now Ripple is launching something that changes everything: a fully compliant, enterprise-grade stablecoin built directly on the XRP ledger. This isn't just another USDC or Tether clone. This is Ripple's final piece of the puzzle, backed 1:1 by US dollar deposits and T-bills. Audited, regulated, transparent. Designed to be used alongside XRP, not instead of it. Why does that matter? Because institutions don't just need a bridge asset. They need rails plus liquidity plus compliance plus on-off ramps. That stablecoin completes the loop. Now they can bridge between fiat and crypto instantly, settle in XRP, park liquidity in Ripple's stablecoin, move it cross-border in seconds, stay fully compliant under US and international frameworks. And once that system flips live, the moment RippleNet corridors integrate XRP and their stablecoin in a closed-loop flow, XRP stops being a speculative coin. It becomes a balancing instrument, a liquidity token held by clearinghouses, a bridge asset for tokenized FX, a settlement layer between digital assets and fiat. That's the transition from crypto toy to financial infrastructure. And here's what happens next. Mark this down. Once Ripple's full liquidity stack goes live across institutional corridors, XRP price won't rise gradually. It'll reprioritize. It'll be recalibrated based on enterprise usage, corridor demand, and market-making requirements. You're no longer playing in a speculative sandbox. You're entering the realm of institutional capital. And that's a completely different game. Let's talk numbers. Right now, 1,000 XRP is a $500 position. That's exposure, but it won't change your net worth. Now think about 10,000 XRP. That's a $5,000 play at today's prices. If XRP just hits $5, you're looking at $50,000. That's not Moonboy fantasy. That's Ripple's low-end valuation target, based purely on corridor demand and institutional flow. Now push further. If XRP even captures a fraction of the $155 trillion global cross-border payments market, you're not talking about $5. You're talking about XRP being required liquidity, used in settlement stacks, programmed into smart contracts, parked in central bank digital currency reserves. At that point, 10,000 XRP isn't a crypto investment. It's a stake in the global monetary infrastructure. But here's the hard truth. You won't be able to buy XRP cheaply at that point, because once Ripple's stablecoin stack is live, once custodians are offering wrapped XRP to institutions, once ODL corridors are upgraded with regulatory-compliant flows, you're not buying from retail anymore. You're buying from market makers, from OTC desks, from custodians who aren't in a rush to sell. You'll be paying a premium for utility you could have locked in for pennies. That's the difference between pre-deployment XRP and post-deployment XRP. The smart money knows this. That's why wallets in the 10K, 100K XRP range have been steadily growing, especially during regulatory chaos. Institutions and insiders were never betting on short-term moves. They were betting on infrastructure alignment. And now we're there. Ripple has regulatory clarity, global corridors, enterprise clients, CBDC pilots, an institutional stablecoin, a multi-chain vision with EVM compatibility and hooks. And you're still asking if XRP will hit $1? You're asking the wrong question. The question isn't if XRP will rise. It's what role will it play in the new financial order? Because the moment institutions go live, and the liquidity engine starts turning at scale, XRP stops being a token you hold. It becomes a token that the world uses. And the only people who will benefit from that transition are the ones who positioned before the rails lit up. So, how much XRP do you need? Enough to not regret missing the single most asymmetric financial shift happening quietly in plain sight. Because once the institutions flip the switch, you won't be early anymore. XRP's role in the new financial order. The next financial system won't look like the one we have now. It'll be faster, interoperable, and above all, tokenized. Tokenized deposits, tokenized bonds, tokenized FX markets. And behind that tokenized future, liquidity engines, bridges, neutral settlement layers. That's where XRP comes in. Ripple isn't just building for remittances anymore. They're laying the rails for interbank liquidity, for central bank interoperability, for real-time settlement between tokenized assets. And XRP is the bridge asset behind it. Look at the IMF's policy statements. Look at what the BIS is piloting with mBridge. Look at Project Mariana. All roads lead to a world where value moves frictionlessly between currencies, assets, and blockchains. And in that world, neutral bridge assets like XRP aren't speculative. They're required infrastructure. Now, here's what that means for you. XRP is no longer a retail coin. It's becoming part of global plumbing. And owning it early is like owning equity in the internet before browsers existed. So again, how much do you need? If you believe in XRP's role as financial infrastructure, then it's no longer about price predictions. It's about positioning. Because when the switch flips and the new system requires XRP to move value, demand won't be coming from YouTube commenters. It'll be coming from clearinghouses, payment providers, and central banks. The time to stack is now. Because once those players are live, XRP is no longer a play, it's a protocol. So how do you plan your holdings? Calculating your XRP stack, realistic tiers for real impact. Let's break it down. How much XRP is actually meaningful? Here are the practical tiers every smart investor should understand. Tier 1, 1000 XRP entry level. At 50 cents, this is a $500 play. If XRP hits $5, that's $5,000. This is the bare minimum if you just want exposure. Tier 2, 5,000 XRP early positioning. At current prices, this is around $2,500. If XRP plays a serious role in future liquidity networks, this becomes a mid-five-figure position at conservative targets. Tier 3, 10,000 XRP, the foundation stack. This is the tier most early whales held in 2017. At 50 cents, that's $5,000. If XRP ever reaches $10, you're sitting on six figures. More importantly, this level gives you meaningful exposure to the network's upside. Tier 4, 25,000 XRP institutional alignment. At this level, you're mimicking the wallets that have been stacking during the lawsuit. At 50 cents, this is a $12,500 play. If XRP becomes the neutral bridge for global settlements, you're now in the territory of life-changing upside. Tier 5, 50,000 plus XRP strategic capital tier. This is where you move from investor to stakeholder. You now hold enough XRP to become relevant to governance, enterprise experimentation, and potential staking use cases in the future. Think $25,000 now, with upside well into the mid-six or even seven figures as adoption scales. But none of this matters if you wait too long. Because once the new liquidity architecture goes live and once institutions flip the switch, you're no longer buying from the market. You're buying from custodians, from OTC desks, from entities that don't need to sell. So the real truth? How much XRP do you need is the wrong question. The right question is, how much XRP will you wish you had when the world's financial system runs on tokenized rails? And XRP is the oil making it move. You have a small window to decide. Your decision window is closing. This is it. You don't get to reposition once everything is live. You don't get to accumulate when it's trending on CNBC. The XRP accumulation window is quiet. It's technical. And it's right now. The truth isn't just about how much XRP you need. It's about how early you are before the rails go live. Choose your tier. Stack accordingly. Because by the time you realize XRP's role in the new financial system, it may already be too late. If this hit you like it should, if you finally see what XRP is really becoming, make sure you're subscribed to Be Crypto Smart. No fluff, no hype, just deep dives on what really matters. Hit that bell and let's front run the future.